Alright, the stream should be up on the YouTubes. Somebody can do me a favor really quick and figure out, make sure that's up. Someone check the YouTube link really quick, just make sure it's up, and then we'll start. All right. Okay, let's actually start by giving you guys an opportunity to go through any current trades or any questions you guys have regarding current positions that you have open or that you're looking at. We'll start there, and then we'll start diving into Koyfin and FinViz. We talked through a bunch of different trading ideas towards the end of the market earlier today. We're going to be going through a bunch of those and coming up with potential trade ideas. But for the time being, does anybody have any current trades they're in that they want to go over, or potentially trades that you've recently closed and you want to review with the group? Let's talk the TLT trade really quick, just because people are asking about potentially adding into this trade. We'll talk through Apple as soon as we're done with the TLT. Went over this. We're not going to go too much or too far into depth again, since we went over this towards the end of the session. But remember, does anybody here not know how we came up with the thesis that TLT was going to pop? We front ran the symmetrical triangle. Do you guys understand why we were able to do that? It all starts with yields, right? We understand that there's an inverse relationship between bonds and yields. So if the yield for the 30-year treasury bond is rising, we would expect TLT to be dropping, right? We understand that it's an inverse relationship. And then conversely, if the bonds are moving up, yields must be dropping, correct? We understand that. So TYX is the 30-year treasury bond yield. That black square up at the top was where we had originally viewed TYX, and we said, listen, this could be the beginning of our first lower high. Remember that? And what happens if we hit that first lower high and it continues to the downside? We would expect TLT to pop, correct? So we identified this first potential lower high in TYX 3 weeks ago at this point, and we went long TLT. Now, I did draw that ascending trend line. Do you guys remember the original chart that we posted? We said this looks like a pseudo head and shoulders. We had a neckline that we played the breakdown of, and we got long TLT. But I want to stress the assumption was that this fractal within the black square is the beginning of our descent on the 30-year yield. That's the entire reason why we were able to buy the symmetrical triangle prior to breakout. So we did front run TLT. Gonna post it one more time. We bought TLT back maybe 8 to 10 days ago, actually. When did we buy this? Let's figure out exactly when. July 21st was when we first looked at TLT. All right, so July 21st was when we first started looking at and buying TLT. It was early in the day. Currently, or it was at around 115.50 when we bought TLT to begin with an original price target of 120. Does everybody understand where the 120 price target came from? If you don't know, say something. I will talk through it with you. Long story short, TA 101, if we're front running a symmetrical triangle, the price target is nearly always the top of the fractal itself. right? So for front running up here towards the apex, we want to be targeting the 120, and that's what we did. So first price target hit, TLT, most of our positions are up 50-ish% on the Septembers. What did we do after that? We layered on a Fibonacci extension, and we just utilized the entire body of the symmetrical triangle as the range for the 1.618 fib to come out. Now, having said that, people are asking, should we be adding into TLT right now? What is the bear case for a TLT breakdown? What needs to happen? We just talked about this. What needs to happen if TLT is going to break to the downside? Yeah, interest rates have to go back up. And if you are a classical technical trader, the trend right now is down. You can throw a few moving averages on there. You don't need to. We have them on the charts right now. The trend is down, short term and medium term. When we're looking at rates, you can see it, right? The chart is telling us that we are now in a series of downtrends. This is the third oscillation to the downside. We've broken below the 20 and the 50. We got the quote-unquote death cross. We're breaking a horizontal level here at just underneath 3. So just underneath 3% is a potential capitulation zone. We see the parabolic move to the upside off of the 2-5 breakout up towards 3. That is a very long way to the downside before we can reasonably expect support to be found. If TLT was going to break to the downside, we would expect this level of for the 30-year yield to hold. Right now, it's not holding. All right? So that's the expectation if you want to go long TLT. If you are adding into a position, Mike talked about this earlier today. We are using 120 as our new risk on level. You do not get to play the original symmetrical triangle breakout with the same price targets as everybody else did if you did not originally get in. This is a completely new trade idea. We went through this with Hanno. Hanno has a trade. He said he was thinking about potentially closing the Septembers today because he was already up 50-something% and he wanted to roll with more time. He has 45 days till expiration still on this play and he's up 50%. There's no need to close yet. We're nowhere near our rule set where we want to close near 20 when theta starts fucking with you. If the trend is still up, hold that position. So if he did, and if anybody else did want to go long TLT, we are using the new 120 risk on level to go long. Where is your stop? You can use that 786 fib 11750 to the downside as your stop. Where's your price target? Anywhere between 125 and 130. The 1.618 is at 127. TLT is a little bit more expensive than IEF. You know IEF is your 7 to 10 year. I do want to post this chart just for transparency reasons. From a technical standpoint, it does look pretty good. The problem is there's very little options, volume or liquidity on the chain to actually do something with this, correct? So obviously if the 30-year bond, TLTs, have an inverse relationship with the 30-year yield, you would expect the 7 to 10-year Treasury bond ETF IEF to have an inverse relationship to the 7 to 10-year yield. Generally, it's the 10-year yield, right? So IEF is breaking up and over a horizontal level. There is nothing there really for us to partake in. We can pull up Tastyworks really quick and actually look at the options chain. But realistically, there's just not going to be a lot of opportunity on the, let's see, maybe I'm lying. No, the Septembers, or we were looking at Octobers, excuse me. If you want to go out, right, you want to buy some time on here, there actually is some open interest on the Septembers. I don't know. I looked at this earlier, and I don't know if I just missed it or what, but there actually is a decent amount of open interest on IEF. So this opens up a new conversation. For people that are looking to add into TLT, you can definitely do that. You're probably going to be wanting to buy spreads because it's a little bit more expensive, right? But IEF, horizontal level break, same sort of relationship. RSI above the 50. People are liking buying right now. It does move a little slower. It's a 0.67 ADR. But you have a risk on, risk off level that's very obvious, right? 104.5-ish. We're currently at 105.65. Throw some sort of basic fib extension off of the horizontal level break, and you have somewhere, look where the 1.618 fib is at. I'll post the chart. We love confluence, right? We love when things line up. What is the 1.618 fib, target, telling us right now, where is it at? Where's the confluence? I'll let Stream look at it too. Where is the confluence on this chart and price targets? I'm going to laugh if someone on Stream answers this before one of you guys. Stream, if you can answer this, feel free to. What is the confluence here? Why is this a significant area, the 1.618 fib? It's the 200-day moving average. Absolutely. When things are underneath the 200-day moving average and they are sloping to the upside, it is always, always, always a good idea to expect dynamic resistance at the 200-day moving average. Absolutely. You would use this as a new risk on level. So IEF is giving us a confluence between price targets somewhere around 108.50. We look at the options chain. We understand it's a 10 IV, but a 57.1 IV rank. So even though this is cheap, this is historically, higher than usual IV. We're looking at the 108.50 to 109. Look at the 108s right now for September. 0.30 delta, so that's within the wheelhouse. We love it anywhere between 0.25 and 0.3. You can grab these motherfuckers for, what is this, 63 cents. For $63, you can get a 108. Let's make sure it's feasible. At a 0.67 ADR, this thing moves incredibly slow. You're looking for a 2.2% move over 45 days off of a 0.67 ADR. Is that reasonable? Yeah. So there you go. 2 trade ideas. You're either buying spreads in TLT, because you're probably not going to want to buy full TLT contracts. They're expensive, right? We got to October, since people are saying they wanted to grab some time. These things are going to cost you. They're over $2 a pop. If you can afford that reasonably well within your account, feel free. If you want to spread that, make sure you find something that makes sense from a risk to reward standpoint, as well as an R to R. Right here, I just clicked buy the 125, sell the 130. It'll cost you $1.13 for a max profit of 387. So that's a 3.5 to 1 R to R. You got 81 days till expiration, and you got a 5-point spread there, 125, 130. 50 P50 at 61%. That's actually not bad either, right? So it's 2 different ways to attack the same idea, though. I need to stress that out. If TLT is moving to the upside, it's reasonable to assume IEF is moving to the upside. Which chart do you like better? Which one makes more sense for your account balance? IEF being a little bit cheaper. All right? So, once again, this is all based off of interest rates. We're using technical analysis to risk on, risk off, but the theory has nothing to do with TA. Just want to point that out, all right? Okay, let's talk Apple really quick, because a bunch of you guys took Apple prior to the gap up. I'm not going to talk through the entire process, because this has been a play we've been in for about a week and a half now, and everybody that's in the group knows already what this is. But yeah, TLT definitely needs to make a shove over 120 for me to be confident. We did attack it today, though. I like it. 120.04 on the close, high R vol. I like TLT, not gonna lie. But with if you have a smaller account and you're taking sub $100 positions, IEF is an opportunity. Just remember, these things move slow, okay? So you're not going to wake up tomorrow to a 50% or 100% win. It's going to be gradual. We've been in TLT for a week and a half, 2 weeks, and we're up 50%. It's one of those types of trades. It's kind of like Robin's UUP trade. He went long the dollar in November. 6 months later, he was up 350%, but it took him 6 months. So you're not going to throw your entire account into these trades. It's just one of those things that you buy based off the theory, and as long as the technicals match up with the idea, you just sit in it, patience, all right? Let's talk Apple really quick. Does anybody want to bring anything up with Apple? Is anybody still in Apple, by the way? All right, you're still in Apple. Yeah, I looked at the pipe top as well. I think it's going to be an interesting play, though, for TLT, because it's like bonds do not trade technically like, a company would, because they're influenced by something else. It's the interest rates, right? So it's going to be interesting to see if the pipe top parameter matches up with everything else that we've been seeing. It's going to be an interesting thing. Once again, though, we're looking for pretty far out there. So okay, so a bunch of you guys.
Desi's talking about the pep talk on Apple.
Oh, Apple. Okay.
Yeah.
Let's talk through it. Who wants to take the lead here on the Apple play? Somebody that's preferably in it. Dustin, you want to just let us know what you're looking at for Apple? I don't know if you have your microphone open right now or not. I know most of you guys are still at work. Okay, so long story short, right? We've been bullish growth stocks for 4 to 6 weeks now. Not Apple in particular, but growth stocks, right? We don't need to set the scene again. We've already done it. But Apple has gapped up and over its 200-day moving average. And what we'd like to see Apple do is build a base across the 200-day, right? 200-day being the purple line on the chart, somewhere around 159.50, 159 area. Build a base above that and then begin to see positive price movement over time. I really doubt that there's going to be, where post earnings, the catalyst is over. The parabolic move or whatever we expected from Apple is probably not going to manifest itself past this point. Now, we have an entirely long runway post earnings to let the market do what it wants with Apple. But as long as we stay above the 200-day moving average, I deem it constructive, right? It makes sense, right? We're in an uptrend. We're breaking previous support, turned resistance, now turned support. We understand 200-day moving averages are generally anchor moving averages that can be used as risk on and risk off. We understand that these are dynamic support and resistance depending on which side of price is moving. If we are basing above that 200-day moving average, you have to be leaning more bullish than bearish, right? Doesn't have to be perfect. I'm not saying Apple can't crash, but if you guys are currently holding those Apple positions, what are your expirations on that? Did you guys buy September's or the August based off the ER stuff? So okay, this is a good point here. If you're holding August's, you know, you have a 18 days till expiration, I would probably close. Right? It's better safe than sorry. You don't want theta to be negatively impacting something that moved. It's hard enough to figure out the direction of these fucking things, right? We all know that. It's hard enough to be able to continuously choose the fucking direction that these things are moving. Why allow theta creep in and start taking your premium? So I would probably close probably tomorrow. Anybody have objections to that or anything to add to that? Close your leaps tomorrow? No. What are you currently up in the Apple Play, Dustin, if you don't mind me asking, percentage-wise? Is Hanno in here? Oopa. If you're up, yeah, dude, if you're up 140% right now, I would probably close that tomorrow. Yeah, I want Hanno really quick to talk through his AMD position. So congrats on that play, Dustin. Hopefully we don't do something silly like gap down and take
the way I look at that, when I'm up big on something, the way I look at it is I can close my position, lock in the game, and just reset. The stock is gonna keep going. You know what I mean? Just buy a different option, lock in those games, roll it.
Yeah, you can always get right back in and roll it, like you said. If it's a position that the only thing that we're worried about is theta, right? We don't want to. If he's up 140% in the Apple play, there's 0 point to allow theta to impact that premium. So fuck it. Hanno, really quick.
As long as it's in the money, yeah, the theta won't affect it too much, but yeah.
Hanno, post in the strategy session, and I don't care if you type since you're in the library, but just let us know. Are you still in AMD, and what's your price target on the AMD play? I think you're the only guy that's still in a semiconductor name. Yeah, Adam, you're not wrong. If you're bullish, roll it. 100% correct. 200% correct. That's what we were just talking about, the TLT position. We grabbed some Septembers 2 weeks ago, and we don't want theta to start impacting them, but we have plenty of time still. So Apple not, though. Some guys grabbed the Augusts 2 weeks ago, and now they're up over 100%, and at that point, there's no point in letting theta fuck around if it consolidates, right? First price target is 100-ish on AMD and currently 96. what is this, 97.28 after hours. So you're almost there, right? What strike did you buy on the AMD play? You got the September expiry. What's the strike, though? You grabbed a 105, 110 call debit spread. All right. That makes sense. So your first price target is somewhere around 100. You grabbed a September, but you still have time. So assuming we get up to 100, it's not an automatic close, right? It's a monitor day to day. Roll your stop up probably to where we are right now, and don't take anything less than 97.5 or 98, depending on where we are. That's a good trade, man. Congrats. That's awesome. Okay. Any other open trades that we're in right now that you guys want to go over? If not, it's time to hit the fucking scan. FinViz time, baby. FinViz time, 50-day highs. We're just going to run a basic scan to open it up. 50-day highs, 886 names. It's been a long time since we've seen this many fucking names on here. Average volume over 1 million, optionable and shortable. Let's open it up. 152 names.
Yeah, I just had a quick question. Going to my Square trade really quick. Regarding, I was talking to Mike about it a little earlier. What do you think about what Bulkowski says about
I did not play HKD,
white
bro,
soldiers?
but it is fucking crazy what happened. Congrats.
That makes sense. What I was getting from it, or did I kind of like basically? It seems to me like he says it's rare, but like it just kind of like you're calling out a breakout that's already happening. So of course it's got a high success rate.
So Bulkowski, the way that everything is set up on Bulkowski's site is he does not count it unless it's a confirmed move. And yeah, a lot of the times you give up sometimes double-digit profit spot for a move to confirm, right? Think of what like Mike. What's a good example? A double bottom. Double bottom would be a great example where the move off of the lows might be like a 10 or 15% move before it validates, but the success rate post that 10 to 15% move or whatever is so high that it's worth getting in afterwards, if that makes sense.
Yeah. Okay. Yeah, just the way he writes it is confusing to me because at first he's like, it's as rare as finding a $5 bill on the ground, and then he's like, I'm proud to say this is like one of the candlestick patterns I know. And then he finishes his whole paragraph by saying, actually, maybe I'm not so proud to know because it's just like, it doesn't really tell you anything.
Yeah, I have mixed feelings about candlestick patterns, but you're right. You're right. Sometimes the way that he calculates things, he gives up a lot of potential profit. But what does he make up by giving up a lot of potential profit? Or what does he gain?
Less risk.
Well, a lot less risk, yeah. So he takes a lot less positions because he waits.
I tried it like I typically just as like if I'm looking at a stock and I see a 3 white soldiers print, I mean, I try to just take it because I literally never see those, especially in like big cap tickers.
Well, especially with the market doing the thing that it's been doing, acting the way that it's been acting, right? It's just
for real.
Okay, so
Cool.
I'm on FinViz right now. I dropped the link in chat. Go through the charts portion. Just roll through it. What stands out? CDNS, right? We talked about this on Friday, or what did we? 2 weeks ago, somebody called out CDNS. I don't remember anybody in the group that got into it, but we had a symmetrical triangle breakout on the 18th, 19th area of July. I don't think anybody grabbed it, but we had it charted, so let's talk about it now. We have an obvious overhead resistance somewhere near all-time high being 192.70. But what interests me the most about CDNS is not necessarily the fact that it's at an all-time high. Obviously, that's the most important thing for buying it right now. But I think the most interesting fact of CDNS is look how well it's held the 2020 highs, man. Everything else in the fucking market has come down and tested these 2020 highs. Why did CDNS not? Look at this. For whatever reason, the market did not want to sell off CDNS, that blue line under the 2020 highs. Look at any of the major indexes. This is a software name. Look at XLK. XLK drew down, right? Look at the Qs. The Qs drew down. Why the hell did CDNS not? That's relative strength, right? so far above the 2020 highs. During the 2022 quote-unquote bear market, this thing at its worst still needed to drop another 40% before hitting its 2020 highs. That is relative strength, boys. So, looking at the all-time high breakout, somewhere around 190-ish would probably be that risk-on level. I think that one thing that is holding us back is that CDNS. The chain itself is pretty light. At a 3.14 ADR, excuse me, and a $51 billion market cap, this is a large cap that moves relatively slow for a tech company. You got some open interest in some in-the-money calls already in November, but other than that, there's really no opportunity on the chain here. You got some leaps. So CDNS, great looking chart. For whatever reason, the market did not sell it off, but no real opportunity on the chain here, unfortunately. So I'm going to keep going, but I want to point that out. Feel free to post tickers, guys. Let's go through as many as we can. There's a lot of shit to go through tonight. I'm going to call out a few of them that we didn't take as a group, but we had them charted. Look at Crocs. Alex was the one that brought up Crocs originally. I know 2 weeks ago we had charted this horizontal level. It bounced. We got a perfect BRB. Nobody got in. Putting it in chat right now for transparency. We can't afford to miss things like this off the lows. If we find those BRB setups in sectors that are showing relative strength, and at that point we knew XLY was the area of the market that we wanted to try to get long. We cannot afford to miss those. ENPH, how about this? We're talking about semiconductors with Hano. How about an all-time high? $38 billion market cap with a 7.16 ADR. So
hey,
Ian, what's up?
Sorry, I joined back and it didn't sound like you were talking. My bad.
That's all good. Ian originally bought this as a day trade. The day that it gapped, turned it into a swing trade, got all out of it. I didn't ask him his overall profitability, but he's now out of ENPH. But that was a heads up play. As long as we build a base above that all-time high pivot area of 267, 268-ish, this is a great-looking semiconductor name. Look at every other semiconductor name, right? Look at TSM. Everyone's asking about TSM, rightfully so. They're one of the largest companies in the space. They're one of the most fund-friendly. Everybody fucking has this in their 401k and everything else. 2.74 ADR, $440 billion company, but look at the drawdown off of the all-time high in January. Nearly 50%. And then look at ENPH. It's the same goddamn space, same industry. This is at an all-time high. There's a reason why ENPH is at an all-time high and TSM is not. So when we're looking at potential semiconductor plays, look at AMD, look at NVIDIA. All of these things sold off like crazy. Why did Enphase not? So if there's an opportunity to get long semiconductor and you don't want to go straight SMH, right? If you don't want to just grab general exposure in the semiconductor industry, ENPH is probably going to be one of the better buys here. We like to buy things that are showing relative strength. Let's throw a hat in the ball in the bucket for the fact that this is traded above the 50 RSI for 2 months straight into an all-time high, consolidating above the 270, 265 pivot. Let's look at the chain really quick. If the market is going to continue to reward risk, we know where it's going. Semiconductors right now. Let's see here. This is an expensive name at an 70 IV, meaning we are going to be spreading this bitch. Let's see. What do we want to do here for a price target? I don't like the fib extension trick off the entire range here, unless we're buying super far out. But this has a 365 PT off that, and we'd probably want to be buying Novembers or Januaries. Let's look at the Novembers really quick for the 360s. They're in the wheelhouse for Delta. It's kind of, okay. How about this? 360, 370. So it's only a 10-point spread. 205 for a max profit of 795. It's right underneath 4. You buy the 370 and sell the 380, and you're getting a 160 Costs you $1.60 for a max profit of $8.40. P50 is at 69%, but that's likely to readjust tomorrow morning. That's actually, I mean, I don't know. That's not that bad, right? Buying the 370, selling the 380 for this is about a 5-to-1 risk to reward, a little bit more than 5-to-1, with a 70% chance of a 50% winner in an industry that's showing relative strength, in a name that is legitimately hitting all-time highs. Not the worst idea, right? So I'm going to go ahead and write this out. What was it? The Novembers?
Hey, weren't you talking about McKesson the other day?
Yeah, because yes, MCK, right?
Yeah. Wait, is your FinViz screener just new highs? Or are you in 50-day highs?
It's 50-day highs, average volume over 1 million, and optionable and shortable.
Gotcha. Thanks.
So I'm writing this out really quick so we can look at it tomorrow morning and see what it reprices at. Excuse me. Allergies suck.
I like the new high thing. It's cool. There's Pepsi and Keurig, McKesson.
Pepsi's a trade we're going to be looking at in like 2 seconds because we want to take that.
Yeah,
I think Pepsi's a trade we want to take.
I think so too. Absolutely. A BRB to all-time high? Fuck yeah, dude.
Okay. So end phase, like I said, if you want a position in semiconductors, the play is there, the risk to reward is there. All right. So we'll look at this tomorrow morning and see what it reprices as. I would prefer to take the 360, 370 on a pullback. I would love to get the same R to R off that 360, 370 as the 370, 380. Okay, I'm going to keep rolling through FinViz.
Yeah, Coors, Keurig, Dr. Pepper, PepsiCo, all hit. Coca-Cola, all hit highs today, all-time highs today.
Yeah, look at McDonald's too. Check out Mackey's, buddy. H&R Block, once again, another 50-day high.
But that's because everybody needs to pay them to fix their fucking taxes after all this bullshit.
They've been on like the scanner every fucking time we've looked at it.
Should have known after all the fucking stimulus money and then all this bullshit everybody's got to figure out all the cryptocurrency gains and losses. People are trying to figure out how to fucking write it all off. Like, oh, now I'll report my cryptocurrency holdings after I lost 80% of them.
Fucking Mackies, bro.
Right, yeah, the whole world goes to shit, and people will still eat McDonald's and drink Pepsis and Cokes.
So this is I'm going to assume this is a small cap. I've never heard of it. $1.26 billion company here, small cap. This is going to be an equities trade, 6.82 ADR. So this thing fucking flies. We got the same rounded bottom accumulation pattern we've been seeing across the market. And we have a horizontal level. What is this? This is a medical and nursing supply company. We want to double check that industry and make sure that it makes sense. But we have an obvious risk on, risk off level, a carving out of the floor above 50 RSI. NEO. I'm going to laugh if Callow already says he's charted this or he's in it or something. For some reason, Callow's in every healthcare name we've ever talked about. But earnings are coming up. NEO might be something there. I'm going to check the chain just for fun, but there's probably nothing here. This is going to be an equities play. And there's a bunch of fucking YOLOs for ER, and that's it. So let's see what they're going for. If you buy the 12.5 and sell the 15, it costs you $15 for a max profit of $235. What the fuck? There's no way. It's gonna reprice tomorrow morning, but that's a fucking like 12 or 13 to 1 risk to reward on NEO. That's funny. Doesn't look like a bad equities trade. I would definitely not buy an option on this. This thing will fucking kill you. Not a bad setup for a few shares to see what happens. Let's see what else we got here.
You're going to kill me for this Datadog suggestion.
No, it's fine. You can post it. Pepsi just came up. I'll wait for you to go ahead. I'm going to post Pepsi when you're done.
No, it's okay. I didn't realize earnings is in like 2 days. Not even worth charting it for me.
A bunch of these consumer staples names have already gone through earnings. That's the best part. They're hitting all-time highs with a long runway through earnings. And Pepsi doesn't have dividends for like a month straight. We don't have to worry about shit for Pepsi. Check this out. We fucking like that. That's an all-time high.
The Keurig chart today also it like wick to all-time high also. It just kind of looks like a blown off the top wick, I think, kind of maybe though.
Check this out really quick for Pepsi, and we'll look at Keurig right afterwards. 177 pivot, currently 176.95, so we're right there. All-time high, RSI above 50, post-earnings, 1.618 fib has us at around 190. 190 right now on the October, so 81 days out, is going to run you $1.42. But let's make sure that makes sense. At a 1.69 ADR, this thing needs to move around 8% to hit that. We have 81 days for this thing to move 4 perfect days, essentially. Yeah. Pepsi is a trade we should probably
yeah, I agree.
Take.
It's also 3 white soldiers. I feel like in this kind of market, if you get 3 strong, solid like candles in a row like that, and that just kind of, I keep thinking about what Volkowski says. Like, it's, if you're seeing the 3 white soldiers, you're just looking at a breakout, like a horizontal level breakout.
I want to get somebody else's thoughts on Pepsi because I feel like it's too. Someone tear this apart for me. It feels like it's too obvious. The only thing I can see that would be a red flag right now is that the 20-day moving average is underneath both the 50. Sorry, the 50-day moving average is underneath both the 20 and the 200, but they're all 3 curling up, pressing into an all-time high, showing you that there is a slight divergence of medium trend to short term.
Check out Post too. It's this is even stronger looking than all-time high because I think it closed at all-time high and it's like mid 3 white soldiers. So. Yeah, I know. Stop.
Stream, my phone's at 20%. If I randomly die, I apologize. And I'm not answering questions right now because I'm not looking, but I appreciate your guys' banter. This is a glimpse of what we do 3 times per week, though. Scan for charts, we go through trade reviews, come up with trade ideas as a group. It's good stuff. Good stuff. Hopefully you're learning something. We love all-time high breakouts, especially in bear markets. Why the fuck are those stocks going up when everything else is dying? Pepsi looks great. Enphase looks great. There's a couple out there that look fucking fantastic, and we're going to try to buy them.
I'm on that stockgrid.io website. Here's the chart. It looks pretty helpful for this kind of thing, I think, just to get a visual all-in-one glance look.
I know we hate the communications sector. It's down the most. But one thing I want to point something out. Google and Facebook are the 2 biggest names in XLC. But T-Mobile, AT&T, and Verizon are also a part of it. We charted Verizon a few sessions ago. Somebody in here called it out. I don't remember who it was. But we broke above the horizontal level that we had there at 138, 139, and we are now pressing into a 50-day high, and all-time high here. We're only about 4% away from an all-time high in T-Mobile. All 3 moving averages are sloping to the upside. The 20, 50, and 200 are in perfect sync. We've held the 50 RSI reasonably well this entire year. Do you remember last year when we shorted XLC and T-Mobile was like the weakest of the fucking stocks? For whatever reason, T-Mobile now. Look at Verizon. You don't even have to look at Koyfin.
You're talking about a short on Verizon, right?
No, a long.
Oh, okay. I was confused. My bad.
Look at Verizon.
I didn't look at the chart yet.
Look at AT&T, and then what the fuck? Why does the market like T-Mobile? I don't know. It doesn't matter why. But the fact that we've identified this current fractal on XLC looks like dog shit. We know that this is...
T-Mobile's got more services. Don't they have like DirecTV and stuff too?
I don't fucking care, dude. I guess so.
Different sector.
All I know is the market isn't selling it off like it's selling everything else off. The one thing I don't like is this pseudo bear flag here on the XLC. Got a little bit of a rising something or other coming up, and it's consolidating underneath the 50-day moving average. So XLC doesn't look great, but I think T-Mobile might be one of those names that we throw in the back pocket. Let's throw T-Mobile in the back pocket, and when or if XLC decides to start fucking acting right, T-Mobile is probably going to want to be one of those sneaky names we buy. Google sucks. Check this out. Everyone's going to be quick to rush into tech, but why would you buy a chart that looks like that over something like T-Mobile that's already in an uptrend? Why would you rush out to buy fucking Facebook? Look how garbage this shit looks. This is why people get chopped up all the time, right? This looks like trash. We've consolidated
because they made money in
Facebook
last time, so they have fucking gambler's fallacy. That's why you would buy it again.
All I'm saying is if XLC starts acting right, T-Mobile is the one company moving up and to the right and near all-time highs. Everything else is not. We should be looking to go long T-Mobile if XLC starts to turn around. Also, T-Mobile, for whatever reason, missed their earnings, and they're still moving up. So, okay. Let's see. We got 10 minutes left. Any other things you guys want to go over? I know there's a few other charts we can go through. Target, Hannos and Target. Congratulations.
The Ford chart.
Post it and then I'll pull it up. I'm going to post the Target chart. Speaking of Target, I'll pull up Koyfin just for 1 second.
There was news about the EV credits today, wasn't there? I feel like all the EV car companies pumped.
Could be. I didn't read a single thing.
My dad was saying. My dad said something about the new EV, the new tax credits coming out or something. It's like $7,500 or something crazy.
Okay, it is. So Target's in XRT. I just want to post this before I forget. Target this is an island fractal, right? I mean, it's, I tried to short this motherfucker. I think a few of us did, and we got bopped out of this trade, but, is what it is. Check out Target. Kudos to Callow and Hanno for calling this shit out. Island fractal with the horizontal level break above 165, currently 165.55 coming up on earnings. Reason why I point this out is look what XRT is doing. I think XRT was leading today of all industries. XRT, not the best looking chart, but we're starting to get a little something there. So Target is screaming at us right now from a technical standpoint that there's a potential play here. We have a huge gap. Understand gaps don't have to fill, but we do know that other idiots are going to look at that gap and incessantly buy it for no fucking reason. If we have a risk on level we can use at 165 to say, never mind, it's not going to work. Potentially this could be a trade idea, but we want to wait for XRT to at the very minimum break above 65, 50, 66. We had that current fractal, or not current fractal, the previous fractal in May and June at 166.5. We break 166.5. XRT is officially making a serious attempt at higher highs. Target is already hitting higher highs, so Target would be a name that we want to buy. And let's give props where props is due. Somebody in here is in Walmart. I don't remember who it is, but Walmart's been on a fucking tear the last 3 days, so congratulations on the Walmart play. XRT is what we want to see, though. We want to see XRT move. I'm going to highlight the fractal, right? But we all know this area, the entire market has the same sort of area that we're looking at here. So XRT above that square would give us an opportunity here to say, look, retail's hitting higher highs. So if that happens, same thing as T-Mobile. If XLC starts popping up, let's go buy T-Mobile. If XLC goes up, we want to go buy T-Mobile. If XRT pops up, Target is one of the names that potentially we could be buying. Also Amazon, right? Amazon's kind of a no-brainer here. But I actually feel like Amazon might be a little bit more risky than Target.
I agree.
If you look at them both from just a level standpoint, Amazon is consolidating at a risk-on level right here, right? We have a previous support that's now acting as resistance. It's clear as day. For stream, I hope you guys see that.
Chop City, dude.
Go over just a little bit here. I'm going to highlight this area. We came down and touched it 3 times at the beginning of the year. We are now experiencing resistance. Support, 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 resistance. That shouldn't be a surprise. I'm going to post it. So Amazon, and then look at Target. Look at the difference. Where is the next resistance area? It's going to be like 185, and we're currently at 165. That's a double-digit move to the upside before any sort of support kicks in. So Target is definitely the better of the two play from a technical standpoint in my mind. TLT, T-Mobile, Tesla. We're not going to trade Tesla. You guys trade Tesla, congrats. Not something we normally do because it's fucking crowded. It's fucking expensive.
Yo, I bet Robinhood's gonna pop on earnings in like 2 days.
Let's see what else. Walmart. So we came up. So we have a couple trade ideas for tomorrow. What is this? This is Home Builders ETF. Home Builders ETF is still ripping, by the way. What was the name that popped up today off of earnings? ITB is up 50-day high today. XHB is a Home Builders ETF. Looks a little better than ITB. There's Builders, BLDR, Builders First Source. Check this out. Not a name that we're probably going to want to buy right here, but maybe we can use this as a puzzle piece. Like, listen, man, the markets are starting to rebound a little bit when you got home builders starting to show relative strength. If the market was particularly afraid that we were going to go into a deep recession, the market would not be buying fucking home builders up 48%. This name's up 48 fucking percent in 40 days, 27 trading sessions, and this is a large cap. So, I don't know. We have some mixed signals here. I don't think I'd be buying BLDR here from a technical standpoint, but okay, so we have a few, checking the rest of these. Yeah, we have a few names here right off the bat, right, that we went through. We have a potential trade for Enphase tomorrow morning if it's available. We have a potential trade for Pepsi if it's available. What were the other ones? We have a potential trade in TLT or IEF, or add into them if you want, or do nothing. That's fine too. Marcos posted Sky T. I apologize for not getting to that. Right off the bat, I want to draw a bear pennant. I'm going to not. But yeah, Sky T. We looked at this, right? Did we look at this yesterday or during a one-on-one, Marcos? Because you're right.
I think we looked at it yesterday, or yeah, it was during a session. Strategies.
200-day moving average on top, brand new IPO. Hey, well, look where price is right now on Sky T. We're at the opening IPO range, right? This is a relevant level. We break back up and over this level. We are now trading above current IPO price, or not current, opening IPO price. I'm going to go ahead and post it for transparency. Let's keep an eye on it. If we consolidate above the 200-day moving average, that's the first step here of constructive price action, and then obviously, if we're above, we'll say $15. We're above $15. That's a pretty good sign for Sky T. This is an XLI related name, by the way. Let's see. So what are the other ones that we looked at? Enphase, Pepsi, Neo for a potential equities play, small cap. We got Enphase. Crocs is too far gone.
Isn't there another company like Enphase? It's like another clean energy company.
Yeah, there's
Plug or something. Isn't it?
What?
I didn't chart it, but isn't Plug like the same type of company?
Is what?
Plug Power. Don't they do the same thing?
Plug Power?
Yeah.
No.
Did we talk about that already? Oh.
No. Yeah, Plug sucks. This chart sucks. This is a terrible chart. And they're not. As far as I know, they're not a semiconductor company. Enphase is a semiconductor space that is used within applications of within the solar industry.
Oh, weird! I thought Enphase was a like a alternative. I don't know, like a battery company.
Well, they're a semiconductor. What they actually do within that space, I have no idea. You'd have to ask Kevin. Kevin knows all of that shit for semiconductors. So. Okay, we have 3 minutes left. Do you guys have any questions regarding any of the trade ideas? We went through a bunch of them. We have some ideas split between call debit spreads, calls. We're going to find cheap ones, a little bit more expensive ones. We went through trade reviews earlier in the session. Any questions? All right, if that's it, we can call it a night. I'm going to sit on this TikTok stream for about 5 more minutes and answer questions from anybody that actually hung out with us, because I didn't answer a single one. So if that's it, guys, I appreciate your time, and I'll see you in the morning. It'll be exciting. Thank you for going through all those charts with me. We went through almost 200 fucking charts tonight, so thank you.
You're the man, Ham.
All right, boys. See you in the morning.